And good afternoon, everybody. This is Michael Filigera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott Wave update for the NASDAQ 100 for Thursday, June 10th, 2021. Market hit the mark today, hit it on the spot. And everything that I was looking for took place, and what I was expecting to happen took place, and what I needed to see from the market to give me some support and credence to the count that I'm using really all fell into place today. So let me begin. We were looking yesterday for the completion of a very small subminute wave 2. And what happened was exactly that. I needed a new low. I needed it to break below 17 or 741. And it did exactly that. Came down to, I believe, a Fibonacci support level at 726. And then what I had left as expectations to give us some confirmation that a third wave was beginning. Remember, going back, third waves are normally the longest and the strongest in a 5-wave sequence. So that's what I'm looking for now, was an initial like boom, where we're stepping in and we're going in the direction of the trend that we are setting. And actually this trend has been in place for 13 years. So this particular segment of it, it's been in force since the lows of a week ago. So we've been back and forth. We spent a lot of time getting down to that low. And so blasting off was a good sign, let's say. So I put a minute wave 2 here at today's low. And it was immediately just met with a gigantic, nice rally that did break above that high at 917. We were looking for it to break both the highs that were above 13,900, and then just got itself up to the second resistance that is not going to contain it and send it lower. But as we're measuring what this third wave has potential to be, okay, and how I do that is with Fibonacci extensions, and I'm running my extension from the low of wave 1, where it started, up to its high, down to today's low. So that is going to measure the relationship of wave 3 to wave 1. And then you go back to your studies and you realize that these are just resistance that should be liked, because the absolute first stop for me would be 14,179 or 14,180 to finish a third wave. So we have, and also, by the way, this minute third is subdividing in and of itself, similar to the wave 1. So this could be 1, that could be 2, and we're in the 3, or we're just finishing wave 1. So either way, we've got some ground to cover before I would say that this third wave is over. Again, that's an assumption that I continue to allow the market to tell me what's going on. But these would be my expectation if this is indeed its intention. So we have next stronger fib resistance at 14,006, and then 46, and then 82. And you can see it's a very tight little cluster of Fibonacci numbers. And that's where I think we may end the third wave. So the third wave may get up to this level, then we pull back. Or if it gets up to here, beautiful. But ultimately, I would think that the third wave should be at least 1.382 to 1.618 times the length of that wave 1. And that puts us kind of up in the stratosphere as far as I'm concerned. But we're going to see. And the reason that I add that stratosphere kind of token to it, I mean, when it gets up there, we'll all be sitting back going like, oh my God, and they're still buying. But we're going to have to trade it. And so we have to keep this in mind, that these are just numbers, and you cannot care whatever they're doing, because you're just playing it for the minute, the second, the 30 seconds. That is how you're going to be able to trade that. So in any case, let's get back to it a little bit closer. Tomorrow's Friday. Fridays can be typically slow. Friday is also an expiration, the last one before the big major, the following Friday. So I don't know what really to expect what we're doing beyond what we're doing, other than we're going to continue to see the futures roll. So in other words, it's like the June gets rolled out or gets closed or whatever's going to happen, but we've got a futures roll going on. That should provide a little bit of bouncing around. And that may not be so easy to trade. So pay attention and realize that there could be nothing in terms of news, in terms of whatever. It's just that this thing needs to roll. And the future, I mean. So, and options are going to be expiring in all of its component stocks. So that could provide some ups and downs and ups and downs. We have the resistance of 4,006. If it wants to run up to 4,046, hallelujah. If it gets up to 82, even better. You know, I will not put limits on where I think that the NASDAQ can go, even when you feel it's going against the grain of what's happening in the other markets. The NASDAQ does what the NASDAQ does. And when we see an inflow of money, so what basically today we saw was an inflow of money back into tech stocks. And remember, we're also heading into the end of the quarter. So you've got portfolio managers, hedge fund managers, and they either got to balance it out to show their investors. I don't know, but these are the factors that kind of start to come in now. So those are our resistance zones. And then ultimately 14,179 to 14,180. It's almost 14,200 for that matter, but that would be the zone up in there. Downside should be limited to just the move that's actually happening. A wave two, we already know, is a corrective move, can slice deeper or soar higher than what we would anticipate in a corrective wave. So normally you can get this almost to 0.618, and I think that it may have, if I were to just measure out this one wave, and I did earlier, but I think this actually did drop back to the at least 0.5, 0.618 level, and then just boop, 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 rallied right out of it. The close was very strong. So, but downside, excuse me, I'd be looking for quick three-wave structures and not necessarily too sharp. So, because next up would be, I'm sorry. Next up would be likely just a 4, but I would expect them to kind of come in higher. And so shallow all the way up to those points. We'll see, again, let the market tell us, and we'll trade what's in front of us. And downside, I think, should hold very cleanly with moving averages. And you always can run internal fibs if you're trading on the very short-term charts. So you can open it up a little bit and you can kind of run fibs all the way through this. So these are nice, strong, these are nice rallies. So you can see the trend, you can see the trend, and you're going to be able to see some different things. Again, I'm just getting into a level where I probably should save it for the trade room, because that is trade room talk. Because you're laying out what's happening and why you should continue to buy it. I'm going to leave it there. And so tomorrow we should have continued upside with shallower corrections. We might have some that take a little bit longer. So you always have reference points to go back to if the things rally right along and you're looking for the correction. Maybe that's what you're going to get. So you can look at it structure-wise. And then you can plan and you can work it against your moving averages and throw some Fibonacci up there. All right. Everybody have a great trading day tomorrow. The next update will be on Sunday.